One of the most widely used charts for predicting massive future Bitcoin price gains is showing the largest divergence since January of 2019. The Bitcoin stock to flow model currently suggests the price of Bitcoin should be around $77,900 per BTC, but as of today, the token's been trading just around 34,000, about half of the expected price. The pseudonymous crypto analyst behind the metric, who goes by Plan B, says the next 6 months are going to be make it or break it for the continued utility of the metric that's a favorite of many advocates of so-called hyper-Bitcoinization. Naomi, I'd like to start with you. Stock to flow in a lot of ways is a very simple model, using Bitcoin's diminishing supply to forecast increased price relative to demand. This is, in many ways, an argument that Bitcoin is and will continue to behave like a monetary asset. But is it?
That's a great question, Adam. I think that when you're dealing with these predictive charts, it gets really, really difficult to actually know what's going to happen because these things don't just occur within a few different variables and different parameters. We have this entire global structure to take into consideration. When you've got crackdowns in China going on and suddenly the price tanks, I mean, these charts aren't predicting things like that happening. And so it makes sense that we're seeing a lot of divergence here from what otherwise might have happened. But it also goes to show the power that governments can have. And there's a lot of rhetoric in the crypto space where they say, well, the government can't shut this down. It's like, I agree, because this is a global phenomenon and different jurisdictions are going to have different rules, but different governments can definitely throttle it and thwart it. And if the government in the United States started to enact some of the same policies that China is happening, what if there's a big environmental push and, everyone's like, well, Bitcoin, you can't have mining here either. And then, well, I mean, what would that do to the price? So there is so much that the governments could do because they just wield way too much power. And so it is interesting to see charts like this and see what might have been and the prosperity that might have been created and all of this, and then to actually see the reality and how the government's bad laws have kind of dampened that. So it does provide a kind of compare and contrast thing. Where it's going, I mean, I have no idea. Maybe someone else on the panel has a better idea. Obviously, I'm still long-term bullish, but in the midterm, governments can actually influence this a tremendous amount. Will, I'm going to throw this to you. What are your thoughts? Where are we headed?
Just in terms of the chart, I'd happily see Bitcoin go to zero so we could stop talking about the stock to flow thing. It's just like makes absolutely no sense, and it's made no sense since it came out. It's just ridiculous. You don't just like come up with a price by charting the year and then the supply of issuance. Like you can do the same thing with celery. It's not going to make the price go up or down or whatever. It's just like demand is what causes these things. And to Naomi's point, like China and all the news that came out of there created a lot less demand for Bitcoin, the asset. And so it went down, and maybe in the future it goes back up. But plotting the history of Bitcoin's price and then drawing a line through it does not really sit well with me. So that's my take on this story.
All right, let me jump back in there and kind of set things on a slightly different path here. So when I'm talking about kind of the monetary element of this, effectively what you're looking at with this is they are comparing it to the history of the monetary metals, which would notably be silver and gold. So in a situation where you have supply that gets tied in with something that is desirable because it has moneyness characteristics behind it, and you have escalating demand, then you can actually kind of model what future prices look like. So the question to my eyes is a lot less about, is this predictive of the future of Bitcoin price, and a lot more about, is Bitcoin behaving like a monetary asset in the way that gold and silver traditionally did in years past? Now, that is a question that I don't really think we have an answer to, but it's a question that's really critical to kind of the path that Bitcoin is on right now, which is very much as this sort of future global reserve asset path, right? If that story is true, then stock to flow has a decent argument behind it. If that story isn't true and that's actually not what's happening here, then it's probably going to diverge from that. And so I think that, again, to this point, irrespective of whether this is predictive of future price, for other reasons, the question of, is the narrative that Bitcoin is largely riding on at risk as this price is at risk, or are these things just disconnected? I appreciate this is about as wonky as I could have taken this topic, so I apologize in advance. Zach, to you.
Well, what is it? Well, I mean, what's your pick? Is it make or break? Like, is this model going to live 6 months from now? What's your gut say, Adam? Make or break?
I have no idea.
Well,
I didn't
what the
really.
hell? The next 6 months are going to
Right.
make or break it. Come on,
I'm with
break
Will.
it.
take a
I
stand.
blindly follow Will.
Kill
What do you
all these
think?
charts.
Okay.
Naomi, what do you
Okay.
think? Make or break? Make
I
or
mean,
break
I'll
for this model.
just mention it's an interesting way of phrasing it, because saying like, is Bitcoin behaving as a money? And it really is largely are people perceiving Bitcoin as behaving as a money? Because it's all about people's expectations and where they're putting their investments, and that's what's going to determine whether or not this is a store of value. So rather than phrasing it as like an active thing, like Bitcoin is behaving like this, it's this passive thing, and it's determined by people's perception of it, which is, you know, it's very interesting because there's a lot of game theory in there. Other people thinking that Bitcoin is going to be this store of value, so it may not even be, you know, largely based on people's own convictions. It can be just what they think other people are going to be doing and making bets according to that. So it's just a very interesting phenomenon. We haven't really seen anything like this because it really is such a grassroots money evolving from the ground up phenomenon. There is no government fiat. There is no government say, we demand that you consider this to have value. It's just the market, you know, evolving and saying, well, we've kind of figured that it does, and we've decided that it does, and value is subjective. So super interesting to see it play out. And I have no idea where it's going.
So just to wrap
Extremely
up on
meta
that.
take.
Yeah. So I mean, like, if you so Naomi, to your point, you know, if you draw back kind of the lens of history, right, and you look at like where did gold and silver standards emerge from, right? What you find, and I've been reading lots of Rothbard lately, so I apologize again in
Excellent.
advance for the economic take on this. What you find is that these standards actually tend to be like emerging, right? They tend to be things that come up organically because they just happen to be the best way to do money that we've really found to do. Now, that's not the way that things work today. Today, when we're talking about monetary policy, we're talking about monetary policy that is set by a central committee or by a group of countries or something like that, and doesn't have that kind of bubbling up characteristic about it.